Are we live?
There's also a 14-second delay.
Mhm.
So you'll say something, and so if you get in a question about what you say 14 seconds later,
Okay,
then that's the reason why.
okay. So you're going to tell me when I can say we're going to be another 3 to 5 minutes? Okay.
Because I just pressed start streaming.
I see her.
You can see her. Okay. Fantastic. Can you hear her?
Good morning. Mm. Good morning.
One second. I can hear. You can hear it. Okay. Fantastic. Okay. So yeah. Real
Okay, great. Welcome, everyone who's joining us this morning for the first Value Builder webinar presented by Innovative Business Advisors. I want to welcome you all. We're going to take about 2 minutes to get everything, give everyone time to log on, get your system set up, and then we'll be starting. So go ahead, log in. If you'll bear with me for about 2 minutes, and then we'll actually start the webinar at that point.
Don't worry about this.
Ready to go?
Whenever you want to go.
Okay, great. We're good to start then. Let's go ahead and get started. So the first thing I want to do is spend time on a little bit of housekeeping relative to the webinar and give you a little bit of a framework of what we're doing here. As many of you know, this is the very first in a series of mastermind events related to the Value Builder system, and how you build value in your business. This is something that we've been doing at Innovative Business Advisors, but up until today, we've held face-to-face meetings in either our office in O'Fallon, Illinois, or here at Medici Media Center. Well, today, for the first time, we're actually going live with a webinar. So we are testing to see how this process works and to see how many business owners are more interested in this format than the face-to-face format. So just so you know, we have a crew here in the room with me to give you a kind of a visual of what's going on. And we're broadcasting live from Medici Media Center, which is in St. Louis, Missouri. Now, you are watching on a screen, and if you noticed, if you page down on your webinar link, you will see toward the bottom of the screen several data entry boxes where you can enter your name, your email address, and questions. So that's what we're depending on to make this meeting interactive. We're going to be looking for you to send questions in, to make comments, so that we know you're out there, we know that you're hearing us, and that we're being responsive to the questions you have. So let's go ahead and take a minute to do a little more in the arena of housekeeping, I'll call it. So I'm targeted to present roughly 30 minutes. And then in addition to the 30 minutes of the presentation for this particular mastermind or webinar, I will open it up for questions. I'm also going to encourage you that if you have questions as we move through the webinar, to go ahead and enter your questions, send them in to me. We want this to be as interactive as possible, so please go ahead and send your questions in. Today is more informational than a deep dive. As we walk through the content of the day, you will see that what I'm presenting is more of a framework of what the future masterminds will entail to give you some basic information to make a decision as to whether or not this looks like something that is of value to you. We're going to spend a minute on the back end talking about how you participate in the future. But I'm sure one of your first questions is, who is on this call? So the first thing that I want to do is pose a question to you, and we're going to do two things here. We're going to see who's out there, and we want to hear from you. Who are you and what is your interest as you've joined the call? So I'm going to share with you that we know that we have business owners, and there's several business owners on here who have indicated interest very specifically because you want to build value in your company, you want to grow your company. There's some business owners here who are not so sure. They are here more out of interest, out of curiosity, and want to know whether or not this is something that can actually be helpful to them. And then in addition to the business owners, we have several people on the telephone who are people that I refer to as subject matter experts. These are my business partners who can help me as I deliver the components of the value builder to our clients. And those business partners are attorneys, CPAs, financial advisors, business consultants. So if you would take a minute and scroll down and feedback, indicate to me number one, that you're there, and number two, what your interest is. There's also a category for others. So if you didn't fit into any of those categories I mentioned up top, write other and describe yourself. So tell us a little bit about the people who are on the line with us, about do we know, are we getting answers back? Sure. And who are some of the people that are answering so far? Go ahead, yeah, go ahead and hit the enter key and let me know that you're out there so that we can get a sense of who's on the line or who's on the webinar with us.
We had 40 registrants.
Yeah.
And they're all showing up.
Oh wow! So we had 40 registrants. Everyone is on.
They're all popping on.
Okay, so everyone's popping on right now. So we have roughly 40 people on this webinar, and again, it's a combination of business owners. And subject matter experts who help us with delivering the components of the value builder system. So one more question. I want to test again and see where you're joining from. One of the primary reasons that we're doing this webinar format is we want to make this available to people who are not physically in the St. Louis area. Up until today, our participants in our webinars have had to physically come to our office in O'Fallon, Illinois, or physically come here in St. Louis to the Medici Media Center. So tell me where you are. Go ahead and scroll down, enter the location that you're calling in from, indicate whether it's, what city, what state, and we want to get a sense of where this group of 40 or so participants are dialing in or are logging in from. Are we getting feedback? So who's farthest away? Can we, are most people coming in from St. Louis?
But I do have a question.
We do have a question, okay? But we have our first question and we've hardly started.
So we have someone asking, I'm a managing broker that is here to see if it will be value of growing my third property management brokerage.
Absolutely. So the question, the question is a person who says, I'm a managing broker. So I'm assuming that means that you're a real estate broker. And the question is, will this be helpful to me in building my third practice for managing property? And the answer is absolutely yes. Please stay with me through this. We'll talk about businesses, how you build value in your business. And one of the key topics we're going to talk about is growing your business, specifically through new locations. So yes, you are a perfect candidate for this webinar. Let's go ahead and move forward and talk more about framework of what we're doing here. So most business owners, and again, I want to say business owners who operate a profitable business will see their total net worth reflected in three primary components of their portfolio. One is their investment portfolio, second is their real estate portfolio, and third is their business. It's the intrinsic value of the business. And as you can see from this chart, on average, typically the real estate holdings tend to be the less. Now, the question I just received before is from a property manager: if you hold those properties, your business actually holds substantial real estate, so your business value includes real estate. It's a little bit different from here. We're talking about individually owned real estate. Second, your investment portfolio, which you watch very closely, and you work with your financial advisor to grow that investment portfolio. But the third and biggest part of your net worth is your business. And we want to talk about two concepts as we move through these masterminds, and that is, number one, what is the value of your business? Number two, how do you grow the value of the business? And most importantly, how do you monetize the value of your business? That's an increased intrinsic value that's housed in the business. So how do you gain access to the cash related to your business? More on framework, and let's talk about the value builder framework. So at Innovative, when we work with our clients, we work with a framework that's referred to as the value builder, and there are 8 key drivers that we work with a client on in terms of describing what drives the value of your business. Within those 8 key drivers, there are 12 subcomponents that we work with a client on, and it can be on a month-to-month basis, and that's typically the way we deliver this service. Is every month we're focusing and doing a very deep dive on one of those key drivers for the business. Let's take a look at what those drivers are. So first, we're looking at financial performance, growth potential. We use a term, the Switzerland structure, and I'm going to describe that in a minute. Valuation teeter-totter, another buzzword that I'll describe. Recurring revenue is critical. Monopoly control, customer satisfaction, and then a third buzzword we call hub and spoke. Let's look first at financial performance. Okay. Financial performance is probably one of the most important drivers of business. And I know that I have some partners out there who are CPAs or who are certified valuation analysts. And you know that when you take a look at what a business is worth, one of the most important things you're concerned with is cash flow. You're looking at top line revenue, you're looking at bottom line revenue, and you're looking at the intrinsic cash flow that the business produces as a result of that revenue. These concepts are simple to understand, but they're extremely difficult to deliver on for many business owners. So what we address in the detailed module, again, top level today, but we'll dive deep in a future mastermind, is what are the things we're concerned about in financial performance? How do we drive the top line? How do we drive as much of that top line revenue to the profit line, to the bottom line as possible? And then even more important, what is the quality of record keeping? I know I have a lot of CPAs on the phone with me too. Do you have a CPA? How do you report and interact with your CPA? How quickly can you pull your year-to-date numbers? Can you slice and dice your numbers to look at the internal metrics of your business? So these are the kinds of things we delve into when we talk about financial performance. Next item, growth potential. As we value a business, we do take a look at prior performance in terms of guesstimating or hoping what the future performance is. But for a business to be truly valuable, that growth potential and a more reliable indicator of what future growth potential is there is what separates the really valuable businesses from the less valuable businesses, especially within a specific industry. So the kinds of things we're looking for is, can this business grow through market transferability? Can I create a new market, or am I limited to the market that I'm delivering in right now? What are my products and services? Am I delivering products that have a demand going into the future, or products and services that may not have a demand going into the future? And what's my cross-sell capability? When I look at my clients, can I cross-sell products and services which will increase revenue? So again, we don't want to look backwards necessarily in this scenario. We want to look forward and feel confident that there is a good opportunity for growth in this business. Another buzzword I mentioned earlier, the Switzerland structure. Okay, and this is a kind of a buzzword within the value builder system. And what the Switzerland structure means is that the country of Switzerland is viewed as a country that is obsessed with independence. So we use that buzzword to talk about a business and trying to understand and trying to focus the operation of the business in a way that it is as independent as possible from any one person or structure. Independence from one specific customer. Most of your revenue should not come, more than 15% of your revenue should not come from one customer. So again, we're looking for customer independence. Is most of your revenue coming from one customer? Employees. Do we have employees in the business who are critical? If Mary, my manager of one specific operational function leaves, what does that do to my company? So how independent am I as far as my employees are concerned? And then thirdly, vendors, my suppliers, my vendors. How dependent am I on one or two or a small number of vendors? And what can I do within my firm to make myself less dependent and more independent? Another part of that, and we'll talk about a little bit later, is you as owner. Dependence on you as an owner. So we'll talk more about that later. Let's go to the next buzzword category, and that's valuation teeter-totter. Now, a lot of people think of this game that kids play on the playground, this toy we play with as a teeter-totter. It goes up on one end. If the heavier kid gets on the one side, that end goes down and the lighter side goes up. We called it a seesaw when I was a kid growing up, So anyway, the seesaw or teeter-totter concept. And what we're talking about here is cash flow. We're talking about cash flow within the business and its impact on value. And the specifics of what we'll be looking at with our customers, with our business owners, is where do we get cash flow to fund working capital? How much cash flow is needed to fund working capital? And we look at the key requirements for cash flow. It's your accounts receivable, your accounts payable in terms of balancing cash flow. We speak of a business as a cash cow, and that's a business that generates a lot of cash. So one of the key things we want to take a look at is, as a buyer or a new partner comes in to take a look at the value of your company, the question is, how much cash do I need to keep this company going? And the answer on the teeter-totter is, you want the requirement to be less cash because that makes your company more valuable. Okay, let's take a look at another really important value driver in the company, and that's the concept of recurring revenue. Okay, many companies will say, last year I sold 50,000 widgets. So my expectation is that next year I will sell 50,000 widgets. But then I, as a person who's looking at your company from a value perspective, will say, well, are those same people going to buy 50,000 widgets? Is it the same group of customers? And if your answer to me is, well, maybe, maybe not, that is an indicator to me that you really don't have a good platform for recurring revenue. Let's talk for a minute about recurring revenue because it's important to understand. Often clients will say to me, there is no concept of the hierarchy of recurring revenue within my business. I sell and I deliver and I sell and I deliver and I sell and I deliver, and it may be the same customer, it may not be the same customer, but when I start a year, I can't tell you without doubt that I will generate a base of 80% of the revenue I generated last year. Well, if you really have control of recurring revenue and you're really managing on a recurring revenue model, you can tell me on January 1st that without a doubt I will have 80% of that revenue at the end of the year because it's recurring revenue. Let's talk about the hierarchy of recurring revenue. Consumables, things that people buy out of habit and they come back to you for on a regular basis. Things like sunk money consumables, which, think of the Keurig coffee pot. Many of us have Keurigs. We purchase the Keurig, and now I have to buy Keurig pods every month, every week. I'm at the grocery store buying Keurig pods. Those pods are my recurring revenue or my sunk money consumables. subscription revenue, and think of magazines in this way. I don't go to the magazine stand and buy a magazine. I may go this month, I may not go this month, but I buy a subscription. So every month I have paid in advance, and every month that subscription is coming into me. Also, one of the things you want to think of in this hierarchy of recurring revenue is it auto-renewable or is it contract revenue? And that's one of the things that we'll want to work with you on, and that is understanding, number one, the hierarchy of recurring revenue, but secondly, how do you ensure that that revenue will come to your business in the future? Next concept. We're on driver 6 of 8, so we're 3 more drivers to go, and then we'll be opening it up pretty soon for questions, okay? Monopoly control conceptually means that you have differentiated yourself enough within your industry and within your market that you can price at a premium, and you are regarded by your clients as being worthy of that premium. The kinds of things that we look at are quality. What is the quality of the product you offer? What is the variety or the way your products and services meet the needs of the specific client base that you're looking at? We're looking at product differentiations, which allows you to price on a premium basis, but we can't just decide in our own mind that we're a premium. It has to be meaningful to the client, and it has to be unique to the marketplace. So these are the kinds of intrinsic things that we look for in the concept of monopoly control that help your company rise in value. Customer satisfaction, probably one of the most important value builders, but most people really can't quantify customer satisfaction. What we do within the value builder system and what we will work with you on is determining what your net promoter score is. And net promoter score is nothing that we developed. Actually, it was developed by Frederick Reinheld. You may know that name, and if you're into marketing and customer satisfaction, you probably know this and are probably a subject matter expert on the concept. But what we will do with you is better understand what your services and products are, and we will help you link with your customers via customer surveys to ask the right question. And ultimately, that question is a very important quantitative measure, and that is, will you recommend my product to your family and friends? That is the key determinant, one of the key questions, housed with some other questions that determines what your net promoter score is. And it gives you a very quantitative measurement. And yes, we do have a customer satisfaction survey component built into Value Builder. So that's driver 7 with driver 8. So this is our last one. Again, it's a kind of a buzzword, and it's called hub and spoke. And if you remember earlier, I spoke to the fact that you don't want to be dependent on any one customer or customer base. You don't want to be dependent on any one or a few employees, and you don't want to be dependent on any one or a few vendors. At the same time, as owner of the company, you don't want the company to be absolutely dependent on you, because what happens when that occurs is that you can't take vacation. The company does not run smoothly when you're not around and you're not accessible. So what creates the value in the company as you think about transitioning that company to a buyer or to your next generation? Whatever that transition is, you're too much of a key spoke. So you're the hub, and everyone else is a spoke. So the kinds of things that you want to do to make sure that you're not the absolute center of everything that's happening in the business to the point that the business can't operate without you is you want to document processes. You want to make sure that there is access to records for the people who need to know. You want to make sure that there's shared client services, that clients don't feel compelled to come to you as owner only, that there's shared decision making. A decision needs to be made that people are empowered to make decisions within the company. So those are the 8 value drivers. So what I'd like to do is take a minute and mention that what we're looking to do today and how the system works. So I mentioned earlier on, step 1 is an assessment, and that is you will actually answer a questionnaire that gives us a basis to assess your company relative to the value drivers. And not only does it simply give you a score, but it tells you how others in your industry have scored so that you get a sense of how you stack up. And you're actually rated on all 8 value drivers. So the value to you is you will see which ones you're more adept at, which ones you have a better score at, and which ones possibly need work. Okay? The second thing that you get in this value assessment is what I call a rule of thumb valuation. And again, when I say rule of thumb, I mean rule of thumb. It is not a specific valuation for your firm, but it is a good estimate for a firm in your industry that generates the net profit that you generate. Again, that number by itself is not something that you want to put a lot of value in, but at least it puts you in a ballpark and gives you a baseline to consider what might be the value of my firm. Now I'm going to ask another question, and we'll see if we have some answers come in on this, and that is, do you know the value of your firm at this point in time? Have you had a valuation on your firm? And just simply page down and give an answer. Yes, no, I have had a valuation. I've never had a valuation. And let us know where you stand in terms of your own knowledge about the value of your firm. So if you would like to take the Value Builder Questionnaire, go ahead and answer and let me know whether or not you're interested in taking the Value Builder Questionnaire. I've included the link here. And hopefully you're able to write that down and go directly to our website. But if you want us to send that back to you as an email with a link directly to the website to do that, to take that questionnaire later, we'll do that too. So just shoot me a note via the comment box and we'll capture that and we'll send that to you later. Now again, this is a quick recap, okay? So our 8 drivers: financial performance, growth potential, Switzerland structure, valuation teeter-totter, recurring revenue, monopoly control, customer satisfaction, and hub and spoke. Okay, so let's talk about kind of next steps, and then we'll get into some of the questions and answers. So tell me what your thoughts are. I just want feedback from you at this point, from having heard this very high-level overview of what we plan to do going forward in this mastermind. First question, would you like a value builder assessment? I think I've asked you that question 3 times. So you can answer it again if you haven't answered it the other 2 times.
Okay, we have a question.
Oh, so we do have a question.
Yep, the question is about majority and control of a company and how that affects the valuation.
Okay, majority control.
Interest, somebody wants to buy out a partner and they have a minority interest, a minority discount, how would that affect the valuation?
Okay, I get the question. So that's a little bit tougher question for me. I'm going to tell you that my background is I am not a certified valuation analyst. I do have one sitting in the room with me though, but my knowledge of how that impacts the organization is that there certainly is a discount if you are a majority owner, and that is a scenario where you do not have the option because your majority owner actually has more control in terms of making decisions about future of the company. Your shares would have probably a discounted value simply because they're not majority shares. So that's a very simple answer to a question that I would like to characterize as it depends. Any other questions?
Yes, another question is, what would you say are the top 3 things a company could do to improve for evaluation type of?
Okay, the very top thing that you can do to improve valuation in your company, number 1 is increasing revenue. I always say to all business owners, rising sea lifts all boats, and that has to do with the industry rising and your company's revenue rising. So as we begin to look at the expense line, I know a lot of people will go directly to the expense line and say, well, we've got to cut this, we've got to cut this, we've got to cut this. Well, the bottom line is raising revenue actually supports everything, so that is one of the biggest indicators of value. But ultimately, most valuation analysts will tell you that when we take a look at what we use as the baseline for the multiple that we apply for that business value, we come down to net profit. So we actually come down to the bottom line. So yes, expense matters. So raising revenue, reducing expense, and then very good records. You want to look at all the components that make it easy for that business to transition to someone other than you, and that is, how well are the records kept? How good are you at strategizing where this business is going in the future? Is there a strategy for growth? Are there tactical plans in place? Is my management team on board? Are the employees on board? So these are all indicators of what makes a company value. But I will always go back to top line revenue as one of my biggest drivers, bottom line net profit as my second driver, and the quality of the records that you keep as the biggest drivers of revenue.
Okay, we have a question. I'll just say that I have not had a valuation, but feel I'm not in a good spot to do so. Is this a one-time thing that I should wait a bit for, or is it good to do it then and do it in the future?
Well, my opinion on valuation is you always want a baseline. You want to understand where you are, and I would be inclined to ask you more questions relative to why you think you're not in a good spot to do a valuation right now. I would strongly recommend that you take a look at the baseline of the company and say, what is my value? And you want to take a look at the 8 drivers that we're talking about here relative to Value Builder. I think the assessment would be actually a great next step for you, because it will tell you very quickly, where do I line up relative to others in the industry in terms of these 8 issues. Because if in fact your profit is not where you want it, it is very likely related to something that is out of whack in one of these 8 drivers. And so if you start there, you get a good picture pretty quickly as to what the key issues are that are driving your profit down. I hope that answers the question. That's my opinion. More questions coming through?
We do have a question, but it's more a post, but would you be interested in connecting with, it says, interested in one of my colleagues, a subject matter expert. Good fit would be for valuation, tax, accounting, or startup groups involved. Would you be willing to connect with strategic partners?
Absolutely. So the question is, are we willing to connect with strategic partners? And the answer is yes, and that's specifically why you're on the phone with us, or on this webinar with us today. As we move forward and we actually deliver the mastermind, there will be in-depth questions. There will be clients with very specific needs in very specific areas that I am not the subject matter expert on, and I will look to you as a partner. So if you notice on the screen right now, a 4th bullet point down, I am a subject matter expert, and I'm interested in participating as a subject matter expert in future webinars. And it's not just the webinars. As a business, as we develop in being innovative business advisors as a business, and we deliver the Value Builder framework to our clients, we often find very specific needs with clients that require us to hand that client off for one component to a subject matter expert. So we're looking for partners to work with on a going forward basis who fit the components of the delivery in the Value Builder environment.
Of the 8 drivers, is there one that you think is a primary driver?
Of the 8 drivers, is there one that I think is a primary driver? And I'm going to go back to financial performance. Top line revenue and net profit are absolutely the biggest drivers of value. Now, what drives top line revenue? It's clients, it's client satisfaction, it's the kind of revenue you have coming in. So then we begin to talk about client satisfaction, we begin to talk about recurring revenue. Yes, those are the things that drive top line revenue, but ultimately, when we sit down and say, what is this business worth? That top line revenue and net profit is absolutely what will drive one number versus another in the same industry with the same net profit.
We got time for a couple more, I think, Marquita. What happens to my accounts receivable and inventory and cash when I sell my company?
Okay, so that's another it depends question. So the question is, what happens to my accounts receivable,
Accounts receivable, inventory, and cash
when I sell my question, or when I sell my company. And that
Sell your question.
particular, yeah, that particular question is definitely and it depends. In a typical transaction, almost always cash stays, always, I'm just going to say, always cash stays with the seller. What happens with inventory and accounts receivable, again, is negotiable. There is no reason as a seller that you would want to keep inventory. The inventory should stay with the business. The reason I think the question is asked is, how do you value inventory at the time of a sale transaction? The same is true with accounts receivable. Accounts receivable is near cash. I call it, that's a term I use, near cash. You've delivered the service, the client owes you the money, you just haven't collected it yet. And as owner, as the seller of the business, you actually could take those accounts receivable with you and continue to collect that as ongoing flow, but certainly you would want to negotiate a different price in terms of what the buyer pays you for the business, given that you're taking accounts receivable with you. On the other hand, you can negotiate for accounts receivable to go with the buyer, and in that case, you would expect to have a premium beyond value that would be tightly tied to the value of that accounts receivable balance sheet line item is.
So if
What
people
else?
want to submit, I think we have time for them to submit one more, and here's one. So two more questions.
Two more questions.
Yep. How does Value Builder increase the intrinsic value of one's company?
Okay, so how does Value Builder increase the intrinsic value of my company? And again, I like the word intrinsic. I like that question because typically when we do valuations, we're really looking at numbers. We're looking at cash. We're looking at cash flow. We're looking at inbound revenue and profit out the back end. But Value Builder really helps to work on the metrics of those functions that are more intangible as far as the financials are concerned, but ultimately have major impact on driving financials up to increase the value of the company. So if we're really simply looking at top line and almost guessing, how do I increase revenue? How do I cut expenses so that I bring more to the bottom line without managing these 8 drivers, and actually it turns out to be 7 additional drivers that have to do with how the company performs well and what makes it a great company to own. These are the very things that we look at in Value Builder, and it's something that I think all business owners should have their eye on, and their metrics that you should be managing day in, day out, month in, month out, year in, year out to improve your company.
Last one, Marquita, you had several people respond saying they're interested in doing the assessment. Can you talk about the time that it's going to take for somebody to go through the process?
Yeah.
The assessment, the process, and if there's any costs associated with it.
Okay, so as far as the assessment process is concerned, if you follow the link and go to our website, you could complete that assessment probably within 15 to 20 minutes in terms of answering the questions that are top of mind questions. One thing that I do recommend that you do is grab a copy of your most recent tax return so that you've got financials, because there are a few questions that relate to financials, and those are the numbers that are used to do the rule of thumb valuation. So you can complete the questionnaire in 15 to 20 minutes, but make sure that you grab a copy of your most recent tax return before you go to do that. And then following that, once you complete the assessment, we will actually go through the assessment and create a machine-readable book that we can present to you that actually goes back and it looks at 2 things. It looks at your answers to the questionnaire, how those answers feed into a rating for you within your industry regarding the 8 value builders. So you will see an indicator. Here's the industry average. Here is how I scored it. Hopefully industry here is here, or the opposite way, and you're here. But in many instances, there's that normal curve around what we call the industry average. We will deliver that to you. Then going forward, what we're looking for, because we consider this mastermind a marketing event, so we're not charging for the mastermind, but on a going forward basis, we will actually dive very deeply with you as a client to the degree that you want to move forward into a consulting arrangement with us so that we can actually work with you through how you, for your specific company, improve across the 8 value drivers. And of course, your input is important in that consulting process, and your team's input, your company's team, we will involve. And typically the way that works is it's over a period of several months that we will work with you, up to a year if in fact we are taking on a consultancy for a full year. Understand that if you sign up for the mastermind going forward, mastermind is going to be very top line, top level, and it will not be specific to your firm. So we're looking at this as a marketing vehicle to give you the information and let you make the determination as to whether or not you want to move forward. In terms of pricing, I ask you to send me a note if you're interested. The cost of the assessment is free. We normally charge for assessments. Because of the webinar and the way we're rolling this out right now, if you go ahead and answer the questions in the assessment and submit your assessment now, we will actually send you a machine-readable, a soft copy of your assessment results, and we will call and do a telephone consultation on what you received, and then make a determination as to whether or not you want to move forward with a consulting engagement, and we'll talk about cost, and it's going to be, and it depends, kind of a situation, and it's where you're located, where we do it, where do we have to travel to, and how do we interact with you to provide consulting for your firm specifically. Okay, let's wrap it up. So, here's a little more information. If you want to, go ahead and go to our website and take the Value Builder questionnaire. If you have more questions, feel free to give me a call, email me. So this is my cell phone. I'm putting it out there, so I've got 40 people out there who might be ringing my cell phone shortly, but I promise you I will get around to answering everyone relative to any questions you may have regarding this. Very best way to contact me is via email, marquita@innovativeba.com, not comacom.com. And that will be a good way for me to queue your questions and to set up appointments and follow up with you from this webinar. Again, thank you for joining, and I'm very interested to hear from you. Shoot me emails just to tell me what you think of this, but also very specifically send me an email if you want follow-up regarding Value Builder and building value in your company. Thanks so much.